What's the journal entry for credit purchase? Or what's the journal entry for cash sales with discount allowed? If you do not have any idea about these entries, then you should watch this video till end to get a proper and clear idea about the frequently asked accounting journal entries in an accounts payable interview. Welcome all of you to another video from Knowledge for All. For the ease of understanding, we will divide the entries into cash purchase, credit purchase, and cash purchase with discount, and same entries from a sales perspective. First, we will look into the purchase related journal entries. Journal entry for cash purchase. Goods purchase for Rs 10,000 from Mr. Arjun. Purchase account debtor to cash 10,000 each. We have debited purchase account because purchase account is a nominal account and the golden rule for nominal account is debit all expenses or losses and credit the income or gain. Here, purchases is an expense for the business, hence we have debited it. We have credited cash account because cash account is a real account and the golden rule for real account is debit what comes in and credit what goes out of business. Hence, we credited the cash account. And the second entry would be goods purchase for Rs 10,000 from Mr. Arjun on credit. And the entry would be purchase account debtor to Mr. Arjun account 10,000 each. Now we understood why we have debited the purchase account in this situation. We have credited Mr. Arjun's account because Mr. Arjun's account is a personal account and the golden rule for personal account is debit the receiver, credit the giver. Here Mr. Arjun is a giver, hence we have credited. And the third entry in purchase would be goods purchase for Rs 10,000 from Mr. Arjun with a cash discount of Rs 1,000. And the entry would be purchase account debtor 10,000 to cash 9,000 and to discount received 1,000. Hope now we have clear understanding why we have debited purchase account and credited cash account. Here, along with the cash account, we have credited the discount received account as well because discount received account is a nominal account and the golden rule for nominal account is debit all expenses and losses and credit all incomes and gains. In this situation, discount received is an income for the business, hence it's credited. Now we will look the same entries from sales perspective. Goods sold for Rs 10,000 to Mr. Arjun and the entry is cash account debtor to sales account and 10,000 each. We have debited cash account because cash account is a real account and the golden rule for real account is debit what comes in and credit what goes out of business. In this situation, cash has come to the business, hence we have debited it. We have credited the sales account because sales account is a nominal account and the golden rule for nominal account is debit all expenses or losses and credit the income or gain. Here, sales is an income for the business, hence we have credited it. And the second entry would be for goods sold for Rs 10,000 to Mr. Arjun on credit. The entry is Mr. Arjun account debtor to sales account 10,000 each. We have debited Mr. Arjun's account because Mr. Arjun's account is a personal account and the golden rule for personal account is debit the receiver, credit the giver. Here Mr. Arjun is a receiver, hence we have debited. Now we understood why we have credited sales account in this situation. And the next entry would be goods sold for Rs 10,000 to Mr. Arjun with discount allowed of Rs 1,000. And the entry is cash account debtor 9,000, discount allowed account debtor 1,000 to sales account. The total 10,000. Hope now we have clear understanding why we have credited the sales account and debited the cash account. Here, along with cash account, we have debited the discount allowed account as well, because discount allowed account is a nominal account, and the golden rule for nominal account is debit all expenses and losses and credit all income and gains. In this situation, discount allowed is an expense for the business, hence it's debited. Thanks for watching this video. If you like this video, please press the like button and share with your friends. Thank you.